Hello guys, welcome back to my channel. So a number of you have been requesting me to make a video on the trade I had on the US30 on the 31st of um August 31st of August. So I'm sorry guys, the video is being uploaded a bit late. However, I hope you'll find the value into this. So here it goes. So I do use a divider, a days divider, basically to be able to tell what day it is. What you do is to click on the settings, or you can even right click settings, and then you see this option that says session breaks. If it will be like this, and then you just click on it, highlight it, click on OK, and then this will come. You can change the colors. You just click here and then pick the color that you prefer. So like always, when I wake up, the first thing is to identify swing highs and swing lows, because I understand above those swing highs and swing lows rise liquidity. And so I notice this swing high and this swing low, and that is liquidity pools. And now, because I don't trade indices in London session, I always wait until we have the New York opening, not actually the equity, which is 4:30 my time and 9:30 New York time, and that is about 2:30 London. Okay, so let me switch to M5. Okay, so we have a new day. For those of you who don't understand this review, refer to the pictures I posted on my Twitter and on my Instagram on the 31st. You'll be able to see the trades I took on US30. So this is how I was able to catch about 1:6. So let's use the speedy. All right, so we are moving. Okay, what time is it? We are still in the early hours. Let me switch to M15. Okay, hold on. So, London session opened right here on this bearish candle, this candle right here. And then I noticed something. I don't, as the name um of my model says, algo footprint concept. Basically, I do not enter any trade until I see liquidity grab. If I don't see any liquidity being taken, I am not interested in the market. And that is why I call my strategies as the algo footprint, because if I do not see that, I am not interested. I don't care if I say a double top, a double bottom, or whichever pattern I see. Even if I see my entry sequence, okay. However, I don't see liquidity being taken, I am not interested. And that's why my trading strategy is a very high win rate strategy. Yeah, and I trade two types of models. So I noticed, so all this that is happening, look at this. This is a smart money reversal for a brother who was even asking me what a smart money reversal is. We have a high, a low. We made this high. Okay, we break it, price returns, and then it falls. I saw this was in London session. However, I am not interested because I only traded this instrument during the New York session. So I noticed we have relatively equal lows right here. Can you see that? These are relatively equal lows, and the algo is going to hunt liquidity that are below these equal lows. So keep moving. We are still in London. You see, price hits on this horizontal line. Now, this is why you need to be so careful the way you trade, because this is retail support. And you see, this candle is being engineered by the algo or the smart money to go up as an inducement for people to start buying. And because this is support, now people are pressing buy orders, then suddenly you are still being induced. Okay, suddenly, see what happened? Imagine how many people brew accounts on this. Anyways, that is not what I'm going to talk about. So let me keep going. So now this liquidity has been grabbed. Let me put a magnet in here. Boom. This has been taken. Now I'm looking for this liquidity to be taken. If it doesn't, it's okay. This is enough. And I'm waiting for New York equity open. We are not there yet. We are not there. Right. And now we have something else. We have an order block. All right. Price came, touches the order block partially, not fully, because if I were to put a fib from here to here, it's not even up to 50%. Okay, so let's keep moving. And now we have a break in the market structure in here. Let me change color. This is a break in the market structure because this high, this low created a high. This high broke this low. Price has gone up and breaks this high. So that's a break in market structure. So now, let's see. Okay, we are almost there to the opening. Okay, 10 minutes to go. There. This has to be the opening. No, this is 9:25. So now, since we have a break in market structure, we have something else here. We have liquidity above this high. Okay. Since price took liquidity below this equal lows, the next liquidity is here on this high, on these highs here. Also, there is liquidity, but we have massive liquidity right here. Okay, so I'm sorry, I have an entry here. This is where I entered my, and I was targeting this liquidity. Okay, I always set my stop loss below the area of interest. So let me put this aside a little bit. Oh, okay. Now, all right. Right here at this candle rejecting this level that took that where liquidity was taken out. This was my entry right here, and my stop loss was below here. Okay. Now because it was 1 to 6, so I think I entered. Um, yeah, I entered right here because I do remember I caught 1 is to 6 my stop loss, and my target was this liquidity. Yeah, I do remember. So let's see what happened. And price takes out this liquidity, and my stop loss was here. Why was my stop loss here instead of here? Because this law was taken out. So if smart money has to go, I mean, there is no point of smart money going below this law. Okay, if the liquidity was grabbed, unless they are attacking this liquidity here. But before this, they need to take out this high or either this one. I do not care which one. What matters to me is that I've had I had my target hit, which is 1 is to 6. All right. So what I mean, you cannot be guaranteed to have 1 is to 6 every time you make a trade. My minimum is 1 is to 3, but I'm okay if I get 1 is to 2. All I don't want to get is 1 is to 1, but 1 is to 2, 1 is to 3 is fantastic. Above 1 is to 3, 1 is to 4, 1 is to 5, 1 is to 10, that is really good. But do not aim to make a very high risk reward ratio, because that is going to make your progress stagnant. You won't move forward because you are trying to catch high risk to reward ratio when you are still a beginner trader. I call myself a beginner trader as well. But basically, this is how I was able to catch 1 is to 6, and whatever happens after this, I do not care. Even if price goes up, even if price goes down, that is none of my business. I'm out of the market by then. All right. Now, there is another brother who wanted me to illustrate how a smart money reversal looks like. By the way, this is yesterday. I caught Nasdaq. Uh, I caught Nasdaq, but anyways. Okay, so for the brother who was asking me what a smart money reversal looks like, let me remove the session breaks. Basically, a smart money reversal happens when there is a liquidity grab. Okay, after liquidity has been taken, most of the times price is going to create a smart money reversal. This phenomenon happens on the lower time frame as well as on the higher time frame. All right, so uh, smart money reversal. Okay, smart money reversal. So it happens like this. Let's say price has been, what is this? Price has been making this, 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 and suddenly price does something like this. Oh my god, that's not. But anyways, you understand what I mean. Okay, I'm not good at drawing, but you see, price took out this high, then suddenly, instead of price making a higher high, we broke this low. This is called a smart money reversal. If I were to use the path, it will be like this: higher high, higher low, higher high, higher low, higher high, higher low. And when we hit an area of value or a liquidity grab is taken, it will be like creating a high. Instead of price creating a higher low to create a higher high, it breaks this low like this. So we broke this, sorry. So we broke this higher high and this and this. So this swing high is taken out and this swing low is taken out. Now what we expect is price to return in this area and then to fall. Okay, so take note of that, and I'm going to look for an example. All right, so let me look for an example on the on H1. All right, let's see, do we have a smart money reversal here? No, this is not correct. And let me look on H4. I want to look for it. All right, here we have it. You see price came all the way up, created a low, a swing low, a swing high. We broke it, went up, a bit of consolidation, price returns in here to go up. So we have a lower low. I don't know if it's a lower low. I don't even understand these terms. And then this high, can you see it? So this low is taken out, creating a lower low. Then price comes and breaks this high, and then we expect price to return and to fail to take out this low, and then price will go up. Let me see if I can find one more example, maybe on the Nasdaq. Perfect, perfect, perfect. Here it is. This is where my swing started actually, after noticing this. So we have a high, a low, a higher high, a lower, and this low. We created this high, which grabbed liquidity from these highs, and then price breaks it, we return to go lower, and we never returned. You see, this high is taken out, price comes, that doesn't respect this low, we break it, price returns in here, and then we fall. So this is what it looks like. Okay, now this is what it looks like. Okay, so I hope you found value in this review and a small teaching on the smart money reversal. I think I'm gonna make a separate video for the smart money reversal, but you can also see that we had it on the higher time frame on the Nasdaq. You see this price returns here and then we go lower. So this can also be taken on the lower time frame as an entry confirmation. So thank you for watching. Please subscribe, share the channel, and yeah, stay blessed and keep practicing on the demo until you are ready to take on the challenge or to go on the live market. All right, take care.